Good morning, traders. This is Rick Majors here at Opteck.com, and this is our daily market briefing. Now, today is, of course, Monday, March 24, 2014. A beautiful beginning to what looks like to be a beautiful week. To give a quick overview here, Monday has a nice little amount of things going on. Most of them are happening either right now or will be in the next couple of minutes with German flash manufacturing PMI. I want to look for, another Monday of pretty much smooth sailing here, relatively regular patterns. But we have a couple of things really that have been moving in the market recently that are worth paying attention to. But first, quickly, let's just take a look at what we have in store first for the week. We're looking on Tuesday at a more dependence on the higher impact ones, and we're seeing a lot less of the medium impacts than we did last week. You have the German IFO business climate, you have the CPI, you have CB consumer confidence. So you have a couple of things that are actually going to be really worth keeping an eye on here for the coming Tuesday. What I'm seeing also in relation to this is that what we had in the last couple of weeks, there was a lot of medium impact announcements. In other words, a lot of things that were relatively important and did cause a lot of volatility in the market combined. And we're not seeing that this week, and I think that they're kind of running out of ammunition there. We might hit a bit of a lull in some of those places. So what we're going to be seeing is more pattern trading with large spikes from major market announcements, which will, of course, inject that liquidity and volatility that we need in there to keep it going. But the usual, what we had last week, where there were several points during the day that you could always see that the market was making certain spikes, this is probably going to be happening a little bit less now. Wednesday and Thursday, again, equally interesting. You have a speech from the Royal Bank of Australia. You've got all sorts of different things happening there. Trade balance as well for the New Zealand dollar. New Zealand dollar has been taking a lot of precedence recently in market strength and competing with the Australian dollar as well, so definitely something to keep an eye on there. Thursday, we've got unemployment claims, pending home sales, so you have the usual mix of American high-impact announcements there coming out. You also have retail sales at 9:30 on the pound. And this is actually really the oddity of the week is usually we're seeing a lot more compacted into a Thursday in terms of market events, in terms of interest for liquidity, and it doesn't seem to be happening. So we actually might have a quieter week than we were originally led to expect on Friday. Now, also on Friday here as well, this week you can see that we have a good amount of medium impact announcements here, but only really one specific high impact announcement for the pound. So I'm actually not expecting this to be an overly volatile week. I'm not expecting it to be a quiet week. I'm expecting it to be very, very run-of-the-mill, and that's exactly what we want. We're looking for something here that's going to give us the ability to trade the patterns, do some day trading, take trends without fear of spikes and reversals and things like that. So this is really a great opportunity. Now, to talk a little bit about commodities just for a second here. We've been seeing in the commodity market, and you can actually take a look at this on the graph really quickly, that what we ended up seeing here was on the overall that gold has been taking quite a dive in the past couple of weeks. Now, we've been seeing it rise. About 2 weeks ago, you could see it rise, especially in the beginning of the month. It took up a nice rally there. And really, since first of all, the federal FOMC report, which is the Federal Open Market Committee, and Janet Yellen decided that she was going to obviously continue cutting stimulus to the economy, and they were looking at raising the interest rate. This was a very good sign for the U.S. economy, and this further plunged the gold price. It literally, in a matter of days, managed to take back what it had accrued for the entire month in gains. And in my opinion, it's not going to stop. I had a preset support line here, as you can see, that's coming close to it now. I don't know whether it's going to be bouncing off of it yet, as I can tell here by the indicators. You can see on a stochastic and an RSI level, the RSI is very low, indicating that this is running out of steam. But on the other hand, also the stochastic is pretty low too, and it's looking for a cross here. What I'm seeing, though, however, is that it has more room to grow. This is a 4-hour chart, so everyone understands. So what we're looking at here is over a relatively long period, it has a lot that it can stand to lose at this point, and further economic reports towards the American government that are positive, further loss of interest in investing right now. Remember that investments go in periods, so when people start to buy in it, they will eventually lose interest in buying and start selling. And that selling sometimes can be more than equal to the original gain that was created by the interest in the market. All right, guys, that's it for our Monday episode of the Daily Market Briefing. Again, I'm Rick Majors. If you guys would like to get in touch with me, you can email me directly at rick.majors@opteck.com. Don't forget to hit like and subscribe, and stay tuned from Monday through Thursday, every single day at 9 a.m. GMT here on Opteck.com. We wish you a wonderful trading day.